Okay, for this week's tips video, we're going to be talking about level on top of level trading or level on top of level supply and demand zones, how to identify them, what's the concept behind them, and that's basically it. Now, this is going to be kind of a tough one for me to describe because it really is subjective to each individual trader about what is a level on top of level, because these level on top of levels are extremely powerful because if you think about it, you have two levels basically merged into one or in the same area. So that means there's two stacks of buy or sell orders. It's not just one rally based rally. It'd be like one drop based rally and a rally based rally so close to each other. So they're like basically double the strength. If you could think about it, double the probability, because then if price has to remove it, in order for price to remove those two demand zones, it has to break through the rally base rally first and then the drop base rally. So let's just quickly talk about it. Right here, like here is the first one. I have some charts laid out, so everything's already prepared. We can talk about it. But here was a rally base drop, base drop. You wouldn't be wrong to draw them like this, to draw two supply zones like that. But if you really think about it, we have a rally base drop, base drop. This is a level on top of level right here. They're so close to each other, so tight. It's not like say if you were just to take a short at this whole level, you're going to be selling. Where's your stop going to have to be? It's going to have to be right around up here. You're going to be taking a stop loss right into a middle of the zone. So that's never a good idea. So your stop would have to go above there. And because these zones are so tight, if you really wanted to, you could just merge them all as one. You see me do that sometimes. And you see me go down maybe sometimes into a smaller time frame just to refine it. Or you'll see me just leave the whole zone like that. Say, you know what, this is all supply here. This is an area where I want to be selling, right? So if we go into, well, here's another one on the weekly chart, but this one is something I would not draw on the weekly. Here we have a rally-based drop and a drop-based drop supply zone. Notice how I draw them too. I draw them from body to wick, right? So in this case, I wouldn't want to call this a level on top of level and draw them like that, because look how much space is between this. This is why I have to say it is subjective to each individual trader, because there is a large amount of space here. And a way you could gauge it is if you wanted to multiply this zone, if it can fit, multiply into 2 or 1. If it can fit in the gap between the two zones, then it's really not a level on top of level. But if this zone was a little bit bigger, you couldn't fit another size of these zones inside here. So that would make it a level on top of level. That would help you make a rule depending if it's a level on top of level. That's something you could create. But in this case, I wouldn't call it a level on top of level. I would just call it two individual levels. So that's basically the concept of it. We're going to keep going into these charts and identify these zones. So I have marked off some on the 1 hour. Here is another example of not a level on top of level. Why? Here would be demand. Here would be demand. We wouldn't want to call this, oops, hold on. We would not want to call this rally base rally or a level on top of level, simply because look how much gap there is between these two zones. If we had this base somewhere around here, yeah, sure, we'd call that a drop base rally, a level on top of level. Because if you think about it, here, well, we're going to go into it. Just hold with me, guys. Here is an example of a level on top of level. This is a great example. You'll see this all the time. Let me scroll in so you guys can see. Here we have a rally, base, drop, base, drop. So here we have a supply zone right here and another supply zone right here. So you wouldn't be wrong. It's like there's nothing wrong with drawing them out like that. You could leave them like that, but you need to understand if this one gets stopped out, you have a supply zone right there. You could draw them like that if you really wanted to. But the main purpose of this is to understand how powerful these zones are. These are some of my favorite zones because simply it's two stacks of sell orders. You have a stack right here and another stack right here. You have two armies of selling right here. If this first one gets removed, then you've got a level up here that's fresh, ready to play out. As you can see, this actually played out pretty well. Prices came up into it, sold down, broke it, came up. What did it come up into? came up into this supply zone up here. You can mark it like that. So in this case, this would be a rally base drop, a level on top of level. They call it level LOL, they call it, or something. That's kind of the phrase they give it. So that's an example of a level on top of level. They're very close to each other, so you call it a level on top of level. You can't fit another zone in between them. So in that case, we would. Maybe in this case, we wouldn't. This would just be a drop base drop. There's nothing like groundbreaking. We're still looking just for supply and demand zones. But if they're so close to each other, you got to think about it how there's two stacks of sell orders in these areas. All right, so I think I got some more on this one. I just want to go into examples just so you guys understand it. Here's another example of a level on top of level right here. We have that supply. You could see how prices came up into the first one, dropped, never came into the second one. So these are two zones that you could have been playing at. They're just two tight levels, so you wouldn't be wrong just to draw them like that because they're all in the same area. Or you could leave them like that. But that's just, you gotta understand the concept of it, is they're just two tight zones together. And if you, all right, so this is an analogy that my mentor always makes. I'm not gonna use the one that he uses, but we're gonna talk about maybe an army. If you have two armies, you have typically your king in the back watching the fight. If you were to think about this, I literally think about trading as a fight. Here you have a base camp and another base camp before the drop, before the army charges, which is the drop, the big drop. They're setting up their base camp, getting ready for the attack. That's what the banks and institutions are doing. They're getting ready for their big drop to happen. They're getting their sell orders getting filled, and then it drops, right? So we have one stack of sell orders here, and if price manages to break this supply zone, then you got another stack of supply zones here. And then if this one fails, then boom, then they're gonna take the king, and these guys have lost the war. So if you kind of think about it like that, as if you have your king back here or anything like that, you got your secret service, as he likes to call it. You got your bodyguard 1, bodyguard 2, and then you're vulnerable. So it's double the protection. Prices don't just have to remove one supply zone or demand zone, it has to go through two, which is a lot harder. I think I got one more maybe. Do I? Not on this one. Let's go to the next one. Did I mark this one? No, I did not. US oil. Okay, here was, I did all supply zones. I noticed that because my eyes go to supply more. That's something in my trading I definitely notice. So I'll try to find a demand zone if I can. But here in this case, this would also be a level on top of level. Two zones close to each other, two armies, two base camps sitting right here. I think you guys get it, so I won't go into too much detail. Try to find two levels on top of levels. And usually the levels on top of levels happen with with a rally based drop or a drop based rally first, and then you get the continuation pattern. So let me quickly see if I can find one. Here was a drop base rally, but these are so far in between each other that I don't want to call them a level on top of level. Here's an example of a rally base rally, two levels on top of each other. Rally base rally base rally. Depending on how you draw them, you call them two levels. Let's try to find one more. The lesson's basically over, but I'm just trying to find these examples. This is kind of one. Some people will disagree and others will, that's why I say it's really subjective to the trader if you want to call it a level on top of level. In this case, I would probably just keep it separate. I wouldn't want to join them like that because there is a large enough gap in between them. I don't know. I just spent 5 minutes searching for, but I had a hard time finding one. We kind of talked about some demand, but I hope you guys understand the concept. Level on top of levels, they're very powerful. They're basically times two. One one supply or demand zone because you got two levels in the exact same area. And basically, they're almost double the strength if you kind of think about it. Remember, there are two separate levels. If you want to think about it as a bodyguard, you got two bodyguards there, and before you can break it, and then you get to the king. You could think about it like that. But they're just good levels to consider on your chart because they are level on top of levels. Very strong. I like to use in my own trading. They're easy. They're not easy to identify. The concept to understand them is quite easy. I thought I described it pretty well, but it's going to be subjective to if you want to call it a level on top of level or not. But it still doesn't matter. It's still a supply or demand zone. It's just whether or not you want to either merge them into one or call it a level on top of level. Okay, and one thing quickly to note before we continue on, as I'm actually just editing this video and I just wanted to throw this clip in really quick, is usually for supply, the second zone above is, let me see if I'm recording, perfect. Usually the second zone above is better than the lower one. Why? Because it's higher up in supply, so it's higher up in price. So usually we think about it as there's always more sellers above current price and or above the zone that's lower. And let's just say this zone does get removed. Prices remove this zone. It takes away a lot of the buyers that were buying in this zone that were breaking through. So there's a bigger stack of sell orders sitting here now because the first wave of buyers and sellers were just battling it out here. Maybe if you think of go back to the army analogy, maybe 30% of the army's now down. There's only like 70% of the army left, so it has less buy orders to go through for the supply zone. So it's going to have a higher probability trade. So that too, but also note that these are rally-based drops and drop-based rallies. Those are turning points. Those usually happen at turning points in the market. These rally-based rallies and drop-based drops are just continuation patterns. So that's just a quick note, and we'll go back to the video. Boop, boop. That's what I wanted to cover in today's lesson about what is a level on top of level. Really just means two close levels right next to each other. But that's pretty much it. Keep this not necessarily short, but enjoy the weekend. If you're listening to this not on the weekend, well, enjoy the rest of your day and talk to you guys soon. All right, cheers. Bye-bye.